Hello, I'm the Northman. Welcome to today's video. And for your daily dose of crypto news, always remember to like and subscribe and to do your own research. Let's get into this article from CoinDesk, and it says Cathie calls Bitcoin a good source of diversification for investors seeking higher returns. ARX data shows Bitcoin has a weak price correlation with stock, bonds, and gold, making it potentially attractive for risk-adjusted portfolio management. What to know? ARK Invest CEO Cathie argued that Bitcoin could be a valuable diversification tool for institutional portfolios due to its low correlation with other major asset classes. Major financial institutions like Morgan Stanley and Bank of America have suggested small cryptocurrency allocations, supporting Wood's perspective on Bitcoin's portfolio potential. Bitcoin would play a growing role in institutional portfolios, according to ARK's Invest CEO Cathie Wood, who described the asset as a valuable diversification tool in her 2026 market outlook. In a wide-ranging note, Wood pointed to Bitcoin's low correlation with other major asset classes, including gold, equities, and bonds, as a reason asset allocators should take it seriously. Bitcoin should be a good source for diversification for asset allocations looking for higher returns per unit of risk, she wrote. Would argue that since 2020, Bitcoin has shown weaker price correlations with stocks, bonds, and even gold, as those assets have with each other, according to ARK's data. For example, Bitcoin's correlation with the S&P 500 was 0.28 compared to 0.79 for the S&P 500 versus real estate investment trust, implying that Bitcoin's low correlation with other assets makes it a relatively better bet. Nice and interesting findings there. Just gonna take out that video so it becomes easier for me to read and easier for you to see. And you can check out this guy from Cardano another time, because Charles Hoskinson always have a lot of things on his mind. For large institutional investors managing risk-adjusted portfolios, this may open the door for Bitcoin to serve as more than a speculative play, said Wood, who has been a Bitcoin bull for a while, with a price target of about 1.5 million for the digital asset by 2030. That would be nice. However, ARK's Invest CEO's bullish comments came at a time when Jefferies strategist Christopher Wood did a complete 360 on his Bitcoin recommendations for investors' portfolios on Friday. He removed his call for a 10% allocation into Bitcoin and swapped it for gold instead. So he's become a gold bug. Jefferies Wood, who added Bitcoin to his model portfolio in late 2020 and increased exposure to 10% in 2021, said advances in quantum computing could eventually weaken the Bitcoin blockchain security and, by extension, its appeal as a long-term store of value. While Jefferies went more bearish on Bitcoin's exposure, Cathie Wood's call aligns with that of major financial institutions that have been saying recently. Morgan Stanley's Global Investment Committee recommended opportunistic allocations of up to 4% on Bitcoin, while Bank of America approved wealth advisors to recommend a similar approach. CF benchmarks also pointed to Bitcoin as a portfolio staple, showing a conservative allocation would and could improve efficiency through better returns and greater diversification. Meanwhile, Brazil's large asset manager, Itaú Asset Management, recommended a small allocation to Bitcoin as a hedge against FX and market shocks. And there's a lot of you to get into. This was the article. I will, of course, as always, link it down in the description below so that you can read the article for yourself. And I wish that you have a wonderful day, and I will see you in the next video. Hade.